morning, traders. Well, let's start things off like we usually do. We saw the positioning data out last week. The dollar was trimmed net long by around 2 billion. The Japanese yen was trimmed by just under 6K contracts. The euro net short was cut by around 5K contracts, but sterling was cut significantly by 10K. So that net short being brought in quite a bit there. Recession fears now dominating inflation. We saw that with the ISM manufacturing and the Atlanta Fed GDP now forecast for Q2 at negative 2.1%. And we combine that with a negative 1.6% for Q1, you get a technical recession. Almost 3 rate cuts are being priced in throughout 2023. And, US 10-year bond yields, they've tumbled. They're below that 50-day simple moving average now. And that's obviously helping currencies like the dollar yen. We can also see the 2's10 curve is very close to inversion territory, and that's not a good sign. We had the German trade deficit data out this morning. It's its first deficit since 1991. That's really something. Swiss inflation is at 3.4%, fastest in 3 decades, well above their 2% target, and leaves that 50 basis point hike for their September meeting on the table. US markets are closed today, so volumes are going to be a bit lighter. Futures are open and trading. They're not pointed to. They're in the red at the moment. And then obviously the calendar for this week, Wednesday is the FOMC minutes. We also hear from the chief economist, Hugh Pill. And then on Thursday, we've got the ECB's minutes. And we hear from Catherine Mann as well as the ECB's lane. Catherine Mann, one of those hawks, they'll be interesting to hear that, what she has to say. And then Friday, non-farm payrolls, 270K is expected at the headline number. And we also hear from ECB's President Lagarde. Just going back to those ECB minutes, the details I'll be looking for is any more stuff around the ECB's anti-fragmentation tool, the size, duration, or light conditionalities that will be attached. Trade the opportunity with Pepperstone.